Hello everyone. Today is April 27th, Sunday, and it's time to talk again about market and our positions. So last week we uh, got pretty big bounce of the market. Let me see how many points. If we check on SPY, uh, yes, it went up from approximately 515 to all the way to 552. And VIX went down below 30 finally. Uh, we don't know it's gonna how long this run will last. Market is right now at a very strong resistance level. Uh, I expecting that at least it will start doing some sideway action for next week. But it perfectly can go higher to somewhere 573 to that 200 days moving average. We don't know. Uh, so let's talk about our positions in stock. It was a lot of questions about it, and I couldn't answer some of them just because, guys, I'm sorry, I lost my OptionNet Explorer and don't see some of them. So I asked guys, and they sent me in a private Discord channel positions, and we will start talk about it. The first one is Amazon. We have there uh, three straddles. One of them just 19 days left. Uh, Another one 82 days till expiration, and the third one it's long term 145 days. So if we go first at 19 days till expiration, let me show you. So we have 200 strike shorts, calls, one call and one put. Right now it costs approximately $18, but we sold it for 23. So this straddle in profit right now after market bounce. If we check it, this is how it look like. And yes, we're in small profit. We will continue to hold it. I hope we're gonna get more from this, and later it can be closed or roll roll to next month. Uh, Another one, we have 82 days till expiration. It's also same 200 strike, one short call and one short put. It's also in profit. We sold it for 35. Right now it's 26.50. So it's approximately $900 in profit. Uh, this is how it's look like on the graph. And third one, we have long term but with protection from upside. Let me show you. It's 145 days till expiration. Um, yes, I have approximately the same 175 strike, and we have one long call at strike 200. So this one is approximately at break even right now. We sold it for 23.05. Now it's trading at 23.48. Not bad. This is how it's look like. You can see that we don't have much risk upside, only from downside, and it's far away. Approximately Amazon should go below 150 at expiration, which I doubt is gonna happen. So we're gonna continue to hold it, and if Amazon start going higher and exceed our long call strike, we start moving it to lift up this tail profit line. So this is how our Amazon look like. It's not bad. We have position on Citigroup. Let me. By the way, it's also in small profit. It's a ratio straddle. Let me show you what we have. It is 54 days till expiration. We have two short puts at strike 70 and one short call at the same strike 70. So if we increase it by 2, it's a ratio straddle, and this is how it look like. So it's should stay in range between 65 and 80. If we go to the chart and see 65, we already get above that level finally, and 80, it's virtually all the way up to the high. So our position has a positive delta right now. It's about delta. What is our delta right now? Let me see. About 10. It's actually better weighted to SPY. For position itself, for C, it's delta 64. I think it's safe, and we finally get back to profit, and I hope that it will continue to go higher and somewhere stop somewhere 72, 75 area. So next position we have Google. Also we have 1, 2, 3 straddles, same as Amazon. Okay, this is the last one. I have the same. It's 145 days till expiration, 150 hour straddle, and we have one long at strike 165. So we are in profit because we sold it for 16.2. Right now it's 15.5. So it's $120, I believe, in profit right now after market bounce up. What else we have? We have a 54 days till expiration straddle at strike 150. That's strange. It's because I have it here. Okay, so we also in profit right now, small profit. So we sold it for 20. Now it's trading at approximately 19.2. So small $80 profit. And the third one is also 54 days till expiration. Actually, let's check them together. It's ratio straddle at strike 170. So we have two shorts, short puts, and one short call. Here how it's look like together with strike 170. So a very nice elephant structure. And this one is also in profit, and We sold it for 38.2. Now it's trading for 27.3. It's more than $1,000 in profit. So this is what we have for Google. I hope it will continue to perform. Market cooling down and volatility going down also, and I expecting that it will be in good shape. So we covering up to 182, 182 right here. We will see if it's penetrate 200 moving average, 200 days moving average. We will probably add something to it to make a little bit safer from upside. Next we have OR, my favorite OR. So also we have one straddle, 19 days left, and it is a break even. It's strike 60. It's my existing position. I would like to show you yours. So 19 days till expiration. We have strike 60. Yeah, it's at break even, and probably next week or so we'll roll it to another expiration. So another straddle is 54 days till expiration, and strike 55. Let's see how it's look like. Mm, 55. My God, what's wrong with that? Yes, so that straddle is in profit, approximately $100. We sold it for 507. Now it's less than 4. So it's this position also safe and in profit. PG, Procter and Gamble. Let's see what we have here. We have two ratio straddles, one of them 19 days till expiration, and it's also in profit. We sold it for $14, and now it's 11.4. And second straddle approximately at break even. So let's go and check them. 19 days till expiration. We have ratio straddle at strike 165. Two puts, one call. Yes, it's back to profit too. So virtually all our position in profit except oil-related stocks, because you know that oil collapsed, and I don't think it's gonna go lower because right now cost of oil uh, less than production cost in the United States. So and we saw quarterly result of Schlumberger and Halliburton, and both of them saying that drilling activity in the United States dropped down. So I think that price of oil will start going back up, and all our oil-related stocks, I hope, will go back to better shape. Let me see what we have here. First of all, we have Schlumberger position, which is big loss. We sold it for $12. Now it's 28, so it's 1,600 loss for right now. Let me show you. 54 days till expiration, and we have strike 40. 2 to 1. Actually, 1,600 loss. It's for double position. So for one position, it's 800. So let's see how it's look like. Yeah, we need that it will go back to 30, 35, 40 area. Right now it's trading at 34, 34.5. So we need that it will go back to close to 40 to be in profit. But by the way, guys, I recommend that to close short calls of that position. If I don't know, did you follow my recommendation or not? Because if we go here and see it's only 30 cents left, so we sold it for $3 and now it's 30 cents. So I don't think it's that call is already did the job and reduce our loss from our short puts. So we can close it and just leave short puts, and we will see if oil bounce up and Schlumberger will bounce up with it. So we will sell new calls later. But this one, it doesn't make sense just to hold it. So we close it, and I recommend, if you have enough oil-related positions, open reverse lizard on oil futures. I will show you that position a little bit later. So what else do we have from oil? We have XOP. XOP, we are actually it's not bad according to what Luis showed me in his position. XOP, we have 19 days till expiration, one ratio straddle, which we have 119, three of them, and 125, 119 strike. We have three puts, short puts, and one short call at strike 125. Well, I believe that this one is already adjusted. This is why it shows in good profit, but shouldn't be real profit. It should be in loss. This is how it looked like. Yeah. So again, the same thing. We can close that short call, which costs right now approximately 70 cents. Uh, we can close it and play just bounce up. And the second struggle, we have 54 days till expiration. Let me see where it is. 54. And this is also, I believe it was adjusted. Uh, we have short put at strike 124 and short call at strike 135. Also should be closed because it's just a 50 cents, and we sold that call for $6, so it lost 90% of value. Right now it shows this kind of structure. Yes, it's in loss because we actually did adjust this position, and it is in loss. We have to play bounce up. So right now XRP trading, it went up from 100 to 113. I expecting that it will go back to 120 area, and if it does, we will be out of trouble. So that's it. I believe we have also Walmart, and TLT. TLT should be in profit. Walmart, we are in loss, but not big one, because Walmart ran up so much. Let me see first of all chart. Yeah, it's bounced up from 200 days moving average, and right now it's trading at 95. Let me check what we have. We have one ratio straddle 19 days till expiration at strike 85. Well, we sold it for $10. Now it's 12.4. So it's a couple of hundred in loss, and we will probably next week roll that position to next expiration, and maybe we will move it a little bit higher, probably at strike 90, because Walmart ran up so much from that strike from 85, and we want to get good price for it. So we again, this is how it look like. Can you see we are approaching the higher range of the structure? So yes, we will roll it probably to strike 90 and 54 days till expiration. The second one, we have a straddle long term also at strike 85, but 110 days till expiration. Let me see. It's more like a protection. Yes, actually I have this position myself. So if we go to, yes, it's in loss approximately $400 right now. Actually, it's $400. Yeah. This is how it look like. we can hold this position because it's actually a long-term protection position. So if we're gonna roll our short term to 54 and do it at strike 90, we will be fine with this one because it's long term and it will protecting us if Walmart drop to 80 area again, somewhere here 85. That's it. Let's talk about Lizard, which we opened for oil futures. Guys, idea here is that because we close our short calls of our oil related stocks and we just hold short puts, we don't have risk upside there, and we hope to get this back to profit. But at the same time, I opened that short term 22 days till expiration Lizard on oil. This is how it's look like. Can you see right now it's trading at 62.5. We did a structure above, it's covering up to 69, and if oil bounce we will get profit from our oil related stocks positions, which has in the money short puts, but at the same time we could get some good profit from this structure. It's no risk from down. It actually shows at expiration small loss of approximately $170, but you don't need to worry about that. That structure has negative delta, and it's only 22 days till expiration. So if oil start going lower again, this Lizard will be in profit, and we will wait probably for another week or maybe longer and slow increase that tail profit line to lock that profit which we will get from negative delta. We will see, but at the same time it's kind of not so risky. It's covering up to 69, and if we check oil price 69, it's top of the old range, so I doubt that it's gonna be unless another geopolitical tension will start with Iran or something like that. I don't expect that oil price will go much higher than 70. So I think it's safe. And how we're gonna adjust it? The same way as we did with our SPY position. If oil start going high, will be above 66, we start protecting it by probably adding some vertical here in this area, or we can move it, put spread a little bit higher. We will see which one will be a better choice at that time. But how I said, if oil start going down again, we will wait for a couple of weeks, maybe less, maybe 10 days, and start rolling short call a little bit lower to get more credit and lift up that tail line. This is about oil. Now I would like to talk about our Lizard position on ES. Guys, I would like to mention again, I already told you, you can't play Lizard on ES without protection. You should be protected because it has a risk upside. Let me show, for example, here I have Jet Lizard, 12 days till expiration left. I already roll it a little. Let me show you, just a sec, it's 12 days. I remove some risk by rolling up short calls, but right now position shows profit, but in real life it's small loss right now. And again, because we have risk from upside, you have to be protected. How we can protect it? We can protect it with SPY calls, we can protect it with mass futures, we can protect it with risk reversal structure, which my favorite. I'll show you how it look like. So, for example, for this structure, we can go to mass, and I'll show you. Yeah, I have some, lots of them. For example, this one. Let me open new one, and you will see how it's set it up. So if we go, for example, 12 days till expiration, same expiration which we have on Lizard, and we can, for example, buy one call at delta about 30. Let's do 30 for 37. Actually, it's approximately $40 cost, and we can go and sell for the same amount one short put to make that call free. So that's how it's look like. We have a risk from downside, but because it's too low and our structure, which it's protecting, has negative delta, I don't mind to own one short put here. I don't mind to be assigned with it because I cut completely virtually all my downside risk, so I don't mind to have some small risk downside, but at the same time it's protecting our Lizard very well from upside. So this is how it's look like. By the way, I have some which already in perfect profit because the market ran up, and it's compensated all my losses from Lizards and even made more. Can you see it shows total profit about 1300 in just for last run up. I lost little bit less from my Lizard, so altogether it's a positive trade. And about Lizard also, I recommend you to open it short term, not more than 2 weeks out. Why? Because I did myself longer term, about 70 days till expiration, and I don't like how it's behaved. It's just behaving like a short call, and because theta is not working in our favor, it's even getting worse because when market running up, IV of calls start increasing, and we losing not just from our delta but also from our Vega, because IV of course get expensive. I didn't lose much from that position because it was heavy hedged with my portfolio and with some ES risk reversal position, but still I did. It is even with hedges in small loss for me. I'm hoping that next week it will stop running up and I will probably close it because it didn't perform as I expected. So, but if we open it short term, about 2 weeks, theta is working very fast for us and compensating even if market run up. So this is my recommendation. Just use it short term if you want, or if you don't like upside risk, don't trade them at all. gonna adjust it. I would like to show you because it was lots of questions. I have some at SPY, and it's a very good example because it's only 5 days left, and that position is in small loss. Let me show how we can adjust it, and probably I'm gonna do it on Monday. If we go here, 5 days. Yeah, it was adjusted already. I had to roll my short call, and now we can, if you can see, we have a small risk also from downside, and it's only 5 days left. We don't know. Market can continue to go higher, and it will be even more in trouble. But let's check prices right now, and you will see what we're gonna do. If you remember, we have short call and we have a put spread, which we sold in the money. So we sold it very expensive, approximately for $7. But now that spread cost only $3.50. I don't think so. It still has a risk downside because it's how many, 25, 45, it's 20 points wide spread, and it's cost only 3.5. Has huge risk downside, but at the same time it's not protecting much our short call because it's only 3.5 points left on that spread. So we can close it completely and open another one in the money. Let me show you how it's gonna look like. For example, we can we can open new spread, which is 565, 555, 10 points wide, and it's again in the money, which will protect our short calls and close the old one, which cost only 3.5 points. And let me this is how it looked like. Can you see? Because we removed that put spread, now we have maximum profit from downside, and we make a virtually no lose zone up to 565, and it's only 5 days left. So I hope an even small market decline right away will put that position in good profit, and if market continue to go higher, we still have another 15 points to run up before it will be in trouble again. So this is how I recommend you to adjust it. And again, but it should be done in when it's not too many days left. This way our put spread will be so cheap. It's a good way to close it, a good time to close it, and reopen another one in the money. So it's again, if market going up, it's very expensive spread which we sold. It will lose all that value to give us a profit, but at the same time it can lose only difference between cost of that spread and how wide that spread is. So it's a 10-point spread, and it's cost about, I believe, $8. So from that new spread we can lose only $2 and make 8 if market continue go up. This is how I recommend you to play that lizard if market going up and not too many days left. Uh, Let me also try to answer your questions in Discord channel. Uh, I'm pretty sure. Question for next video. Uh, from Luis, please cover the various stock position, how we are adjusting them. I have not been able to adjust stocks position this week. Well, I already covered this. How we adjust it? Well, usually with stock position, I'm trying to hold them as long as possible because idea of our stock position, which we use ratio straddle or just a regular straddle to get as much time premium as possible. So because usually we open them for pretty good stable stocks, defensive stocks, shouldn't go far. But today, everything is crazy. Even defensive stocks going flying back and forth and make us nervous. But I hope that time will gonna finish soon and it will be again much less stress and much less adjustments and much more profit from it. So I hope you, at least you can see we will cover it. Most of them came back to profit already, except our oil related stocks. So any tips how temporary increase buying power? But I already answered this previous time. Probably it's okay. Could you explain a bit more on managing the stock straddle position when the position is at or out of the profit tent in either side of the range? Second question for GL trades. What is the rationale to do a same strike short puts and calls with a long call instead of more traditional jet lizard that having naked put and call credit spread that is farther away out of the money in both sides? It's absolutely different trades. If you're talking about regular lizard, it has a risk downside, not upside. But in our case, because we have long portfolio, long delta portfolio, we decided to use that lizard which has zero risk from downside because we already have that risk from our stocks and risk from upside. So we should open it that one compensate another. If we open it just a regular jet lizard, we just increase our downside risk, and I don't think it's gonna work well if market collapse again. So this is why we choose reverse jet lizard in our case as a protection from to make money if markets stay in range and not lose if market starts going down. This is idea of our reverse jet lizard. About strikes, yes, you can use different strikes. I mean, put and calls at different strikes. It doesn't make much difference. I just would like to set up them together just to get as much as possible credit from that structure. But you can do it a different way. You can set calls a little bit higher, short calls, short puts little bit lower, and it will be little bit wider structure but less potential profit. It's up to you. About stocks, I already told about this. If we are if price below our tent, I recommend to close calls for sure because that call is done, and we will roll our naked puts to next expiration, probably go a little bit lower with strikes, and if you can open new short call, but it's up to you, or wait a little when price will bounce up at least some, and after that we'll sell a little bit more expensive call, and this is how we're gonna adjust it from downside. The same way you can do it from upside. So if market go higher, we will roll our short calls to next expiration and higher strike, and lift up our naked puts also for with new expiration. But don't do it very often because there's long-term trades, and we if we choose correct stocks and the market is stable, uh, that stocks should not go pretty often outside of our tent, and shouldn't be much risk there. Okay, guys, thank you very much. Have a good rest of weekend. I hope next week we will get good action and make a little bit more. Oh, by the way, announcement, I should do it at the beginning of presentation. I decided to reduce price of subscription of our Discord channel from 30 to 50% because I understand, guys, that lots of you lose money, but you would like to stay at least longer to see how we're gonna go out from that trouble, at least partially. And I understand that it's become a little bit expensive for you, and I decided to reduce cost. So I hope I work with Wop right now about this. I hope tomorrow it will be set it up new prices. Thank you very much, guys. Have a nice weekend.